This is the most important update video I ever filmed on this channel. Right now, the Bitcoin time window is very urgent. It is very rare to have this much tailwind statistically on Bitcoin. Based on pure statistics, the next 3 months will be very bullish for Bitcoin every single month. This week, on the 18th of September, was the first time in 4 years when the Federal Reserve decreased the interest rates by 0.5%. This is ultra bullish for Bitcoin, and we are expecting actually 2 more rate cuts this year as well on top of it. Bitcoin is coiling up, and we are at the cusp right now of a massive breakout. On top of that, we could have a massive surprise against all the odds if Trump actually wins the election. And the crazy part is most people are not even aware of what's happening right now. In fact, actually, the interest on Google on the trend searches about Bitcoin is on the same level as when Bitcoin was below $20,000. Most people will miss out, and they will only join when it's way too late, when Bitcoin is already over $100,000. Even Standard Chartered has a price target of $200,000 for next year for Bitcoin. Today, we will look at everything important together from A to Z, including Fear and Greed Index, ETFs for Bitcoin, for Ethereum, the liquidation heat map, and where we will go next most likely, and the most important price levels for Bitcoin. Make sure you watch the whole video from start to finish so you don't miss any important information and you are perfectly prepared for what will happen next with Bitcoin. Alright guys, welcome to a new video. If you are new here, make sure you subscribe, hit the ring bell so you don't miss any important or urgent update videos on this channel. As always, I have my black tea today and also I have my mint tea. That's why also you should get a drink yourself. Leave a like and comment for the algorithm. I would really appreciate it, and you will support the channel for free a lot. This is the most important update video of the channel, so make sure you watch the whole video from start to finish so you don't miss any important details. First of all, a massive thank you to everyone who is watching and supporting the channel. The last video got a lot more views than all the recent videos, a lot more likes and a lot more comments. So thanks to everyone who is always liking, commenting. I really appreciate it, and I want to make this channel with you together the biggest and most successful channel about crypto and trading in the world. So thanks again for your insane support. The situation right now with Bitcoin is actually very rare because statistically we have lots of tailwind for a massive pump at the end of this year. In October and November and December statistically are all bullish months. Especially the last few months, Bitcoin has been extremely tedious, lots of manipulation, and the purpose was mostly to get people out the market, to leave the market, to sell the Bitcoin, and to liquidate longs and shorts back to back to back to back. However, I think that this will be compensated for in the last 3 months. This week, on Wednesday, on the 18th of September, for the first time in 4 years, the Federal Reserve actually cut the interest rate by 0.5%, which is very, very bullish. Why? Because this means that more liquidity can flow in the market, especially also in risk assets such as Bitcoin. On top of that, we expect 2 more rate cuts this year, which is also exactly what we anticipated and covered on this channel many weeks ago. 1 rate cut just around the corner on the 7th of November and another rate cut on the 18th of December. Right now is a very golden time window for Bitcoin, because if you overlap the last 4 cycles of Bitcoin exactly at this moment of time, this was the time when Bitcoin pumped up a lot. And most people do not even know about this. In fact, actually most people are out of the market now. They are scared and afraid. Why? Because everyone has been conditioned over the last few months to essentially sell every pump, because the last 6 months was just sideways, up and down. And this was the main purpose, to make sure that most people are out the market and scared before the last run-up, so only the big investors and institutions and whales make money, and that retail will only join again later, way too late, and they will be the exit liquidity. And we can also see this exactly when we have a look on the Google trend search chart, because right now the interest on Bitcoin right now is still on the same level as in the deepest bear markets when Bitcoin was around $20,000. So right now we have all the tailwind, all the bullish news, we have the rate cut. Also, actually, in fact, very soon we have the election in America. And if Trump, for example, wins the election, this will be an additional massive surprise and will be extra bullish for Bitcoin and also the altcoins. But most people are still clueless and don't know anything about it. That's why on this channel, we will keep a close eye on this indicator, because once this indicator is going up a lot, this will be a dangerous time, because this means that the big retail interest is creeping up and they will be exit liquidity just like in the last cycle. That's why I recommend you subscribe and hit the ring bell on the channel so you are informed immediately when this will happen. Next, we got a bullish price target from our friends at Standard Chartered. They estimate that next year the Bitcoin price will be $200,000. I think this is quite optimistic, but it is realistic. Now, generally speaking, those price targets, you can't take them too serious. Why? Because many times those banks or institutions, they use those price targets strategically to essentially do marketing for themselves and to stir up the demand for themselves. Because if they give the people a big price target, people are interested and they will invest money with the bank, and they will of course make money on the fees, on the management fees, and that's why you can't take it too serious. However, generally speaking, Standard Chartered is quite conservative, and that's why this price target is actually not that bad. Next, let's cover the Fear and Greed Index. Now, this index should be mostly used contrarian, which means when people are in fear, you should generally buy, and when people are greedy, generally you should sell. Of course, you get the best results if you combine this with technical analysis on the chart, which we do in a moment on this channel. However, right now, we are no longer in fear. However, people are still neutral because many people don't trust this mini pump yet so far, because we've been conditioned to always sell the pump, and right now people are still uncertain. However, this is good. Why? Because the purpose is to leave out most people and to have them chase the pump later on. Let's have a look at the Bitcoin ETFs in America. So first of all, recently we have more inflows, which is very good. Now, volume-wise, not drastically yet, but this, of course, is already showing that the interest on the institutions is ramping up now, and the selling phase is over now. And I think that this volume will gradually increase as the weeks go by. On the other hand, on the Ethereum ETFs, they are still dead, which is also expected because they will only awaken when Bitcoin really pumps up a lot. And right now, Ethereum is way overhated and underloved. And that's why I think Ethereum is a very smart arbitrage play, because worst case scenario, if Ethereum just goes from completely hated to just neutral, that already is a massive arbitrage. On the other hand, also, you can see that all the institutions, they don't care about Ethereum. You can see no activity on them except for BlackRock, but only minor inflows. 4 million, 4 million, 5 million, 5 million. And of course, as we know, Grayscale, still massive outflows. So right now, again, they are completely irrelevant, but once Bitcoin pumps a lot, they will pick up and they will make a lot of difference for the Ethereum price. Next, let's have a look at the liquidation heat map and why is it important. This heat map shows you where market makers can liquidate the most amount of positions. Why? Because the market is always chasing liquidity, and the market is mostly moving always there where most traders can be liquidated. So right now on the small time frame, we can see we have a 50-50 bias, because above us are lots of short positions and below us lots of long positions. So right now is Sunday. I expect all the shorts and longs to be washed out by Monday or Tuesday. So right here is no bias. That's why we have to zoom out a little bit more. And we can see that actually the last bearish target here, which really makes sense for market makers to liquidate, is below this low here at 57,200. Now, below that level is not that much to gain anymore for market makers. And above here, above 70,000, this is the big juicy part, which is actually very close. If we zoom out right now, this will be the biggest liquidation party on Bitcoin in a long time. And I expect that once we break through this target with volume, we will not go down for a while. That's why I think it is quite realistic and it would be efficient for market makers to stop these people out maybe one more time before we go up and take out all of those shorts here. It's not a must, but more on that in a moment. Let's have a look at the Bitcoin weekly chart. We can see every single candle is representing 1 week of price action. First of all, the structure is still bullish. We have a lower high on the price, and we get a perfect rejection on the 50 EMA with a bullish engulfing, and we got the first part of the bullish reaction. Now, I don't like the price action on the weekly chart because, number one, this is a very disgusting bull flag with very unclean trend lines. And for that reason, I want to zoom in a little bit more on the daily chart. In the previous video, we had a bearish pattern, which is the rising pennant right here with a bear target right here, which we did not hit. And this target right now is no longer valid. Why? Because we got a lower high on the price and we did not get a retest and closed above all the EMAs once again. So this pattern can be now removed from our charts. And right now, actually, we have an attempt of a trend change on the daily chart. Now, the most important level right now is still 65K. Why? Because if we close above $65,000, this would be the first higher high on the price. We already have a higher low, but this will be the first higher high. Now we have two more very important areas right at our nose, aka fingertips, which is number one, this trend line here, which has been the point at which Bitcoin always rejected the last few months. Right here, right here, right here. And again, this could be an area where we see some form of retracement before we go higher. And then again, right here at our fingertips, we have the all-time high resistance area where all the short positions are laying right here. Now this here is actually so close right here. Essentially, if you measure this, all the way to here is almost the same as all the way down to here. Now, on the downside, the only interesting area for market makers to liquidate is actually just this area right here, below this low right here at 57,200. Now this would be actually a nice area because of two reasons. Number one, the market makers could wash out again all the longs once again, and more shorts could be trapped before we go higher again. Also, this is exactly the golden pocket based on the Fibonacci retracement, and this is the most consistent and most respected Fibonacci level between the 0.5 and the 0.618, and this would be, structurally speaking, a very realistic retracement before the price goes higher. If we look at it statistically, in the last few months, Bitcoin has always washed out the longs over and over and over, and right now actually might be the one time where we might not get this deep of a retracement yet. Like I said, structurally speaking, it's the golden pocket. We could wash out some longs, trap some more shorts, etc., etc. But again, this is not a must pick up for market makers because right now we are so close to the all-time highs. This time, there are also no significant fair value gaps right here. So for example, here, there's no gap. Also here, there's no gap. I personally would not chase this entry right here. I would either wait for a retest of this high right here or wait for this liquidation event here. You are not late to the party, but you're also not early. Let's cover briefly the most hated child of them all, which is Ethereum, of course. And our bear flag also is now no longer valid. Why? Our target has not been hit. We created a higher low and we closed again with a candle inside the pattern, which makes this pattern invalid, which means we can comfortably and happily remove these lines right here. And Ethereum right now actually has more work to do than Bitcoin, because Ethereum also has to close above this high to have a first higher high. We already have a higher low, but a very weak higher low, and we are still below the 50 and below the 200. So again, Ethereum is still way undervalued and underloved. I will cover Ethereum in more detail in the next video, so make sure you subscribe, hit the ring bell, so you are informed directly when the next video is dropping. If you want to use every single day as productive as possible, I suggest watch this video next or this video and practice every day as much as you can. I hope you enjoyed today's update video. Leave your feedback and questions in the comments. I will read your comments and help you out with all my heart. Thank you for your instant support. I will see you very soon in the next video. Much love and peace, and ciao.